Okay, folks. Sorry about that. Water went down the wrong pipe. All right, we're opening up here with the barrel of oil going for now over $100. I'm really sorry. Let's try this again. So, what we're going to talk about tonight is yes, the Iran conflict, the price of oil, the inevitable inflation shock that's going to come along with this, and the probability of the Federal Reserve making a policy error too quickly and resulting in some sort of a negative reaction in the economy. So, pardon me. Last tick on oil, 103.88 the barrel, now 104. We got to check in with equities now. Let's say hello to folks. And again, my apologies for the coughing. It won't last. Good point. I don't know whether or not I would short it here yet, but soon, very, very soon. We're long of oil. If this keeps up overnight, we're going to be booking profits on oil. We opened up a position about 2 weeks ago before this all happened. It's not a big position. I wish I could say it was. It's not, but we will be booking profits into this rally if oil does stay above $100 the barrel. Because we need to keep in mind one thing here is that we have a major event coming up, and that is the midterm elections, which generally does not bode well for the party not in the White House. So historically, if you have a Republican in the White House, the Democrats do well in the midterms and vice versa. So there's no way at $100 a barrel of oil that it's going to go well for President Trump. And he knows it. We've already seen the 50-cent hike at the gas pump. That's only going higher. It's going to take a while for that to run off. So keep that in mind. This Iranian conflict, I think, is going to be over sooner rather than later. How do we know that it's not going to go that way? I think it's going to be if they even think about boots on the ground. That would be a major disaster. If they talk boots on the ground, I think that you're looking at $150, $200 barrel of oil. No doubt about it. LCD, thank you. I know the image of me, I changed the light bulb in here today. I need a better lighting system. It's just not working. So I apologize for the flickering. It's not your screen. Miser, hey, Miser, welcome. Tim, good evening. Tell in. California in the house. Sean, welcome. Riscaray, evening to you, mate. Mr. Pete, welcome. Bob, what stock symbol do you use to short oil? There is an ETF out there. I haven't shorted oil in many, many years. There's a vertical way of shorting oil, and that's with an ETF called DUG. DUG is a leverage product putting you short of the energy stocks. So that's one way. I'm sure there's another vehicle out there. I just don't know it off the top of my head to go shorting oil. Normally, I'll just buy puts against either the futures or against USO, something like that, or sell a call spread against the price of oil. Either you're not going to get good premium on USO, but on the futures market, you can get good premiums. So that's the way I would play it. Maybe do one of these deals. CL, You want to go out 39 days so you get time decay. And in this type of market, I would not sell calls naked. I would look to be selling a 20 delta vertical spread, let's say, $5 wide, and you generate a premium. You got 80% probability of a profit there, and you're generating, this is all over the board right now, but probably you'll get filled at around 80 cents. That's on 10 contracts. So that's another way of playing it. Oil just off of session highs here. Very impressive how we pulled back. Let's go 5-minute view. How we pulled back and now have follow through. It looks as though we're going to go to higher highs right now. If we stall out here and fail to do so, we're probably going to get a further retracement. All right, let's check in with the equity markets. We are short of the equity markets. Actually, let me be more specific. We're short of the Qs, to be specific. We did book some profits last week. I believe it was on Friday. Let's bring up the NQ, of which we are short. NQ opening down here, 1.67%. So if this keeps up, it'll be a good opportunity for us to lighten up on the short side into weakness. We're looking at support on the QQQ, which closed on Friday at 599.75 and continued to sell off after hours. I think that we're heading down to 590. Here's the 4-hour view. This is probably going to gap through tomorrow morning. If we remain this weak as we are right now or worse, we're going to gap through 597, which is support. And we're going to come right down here, price target 592.75 to 590 on the triple Qs. Let's check in with oil. Just took out session highs. Let's check in with the E-minis. Scott, hello. There's a good chance the cartel will release reserves to help. Yeah. The problem is that you have a lot of ships that they're just hoard. There's no lack of oil. It's a matter of getting it from point A to point B. That's the big problem. And then add to that, you've got the Chinese now, which no longer get discounted oil out of Venezuela and out of Iran. They need to go into the open market now, buy US dollars to go buy oil from whatever producer they're going to buy from to replace the Venezuelan and Iranian oil. So right there really just shows you why we're in this conflict. It has nothing to do with nuclear weapons. It has nothing to do with bully Iran. It has everything to do with the BRICS. It has everything to do with China trying to undermine the US dollar. And I'll bet you right now, wow, look at the E-minis. Wow, we're going to go to the dollar in a second. E-minis down 1.8%. Really getting crushed here. Even worse than the NQ. Let's bring up the small caps, down 3%. They really got hit hard last week. So it looks like we're looking at a very rough morning tomorrow morning, absent news. The president is famous for creating havoc on a Friday, and then Sunday, all is right with the world. All right, so we got to be open to that. That's why I wouldn't go pressing shorts on Monday. We know we have a deadline here. The midterms are coming. The last thing that people want to see are body bags and oil above $4 or $5 a gallon. So the president knows this. He's not stupid. Let's bring up the dollar now. The dollar is spiking up yet again. Talon, natty gas. We went long of natural gas. Nice. We went long of natural gas. We doubled up our position on Friday. Right, Talon? On Friday, we doubled up. So, yeah, we're going in with a good position this week. So, nice. Good stuff. Let's check in with the precious metals. Oil, gold is flat. I mean, really, this kind of tells you that gold right now is priced properly. Normally, in this type of environment where you have geopolitical risk, you have gold moving up higher along with the US dollar. That didn't happen last week by any stretch of the imagination, and it's not happening now. So the dollar is moving up higher, and the market is saying right now, you know what? Gold is priced properly right now, especially with the rising US dollar. So gold not being treated as a safe haven as normally and historically would be. Let's check in with silver. Silver's actually down. Palladium down. Platinum down. So this is a big tell about where the head is with the markets. They're not viewing precious metals as a safe haven at current. Let's check in with crypto. Wow, XRP taking a nosedive here, down 1.95%. But to be fair, we want to have context. So for context, we're in a very, very tight trading range here. And this does include tonight's price action. Let's check in with Bitcoin. Bitcoin down 3.69%. But again, context matters. That's why we're going to go to the weekly charts and say, okay, Bitcoin is down 3.69%. That's pretty bad. But when you take a look at the trading range here, I would argue that this is probably a buying opportunity. There's your very tight wedge formation. We've stopped going down. I think there's a very good chance that this goes up, especially since you have money rotating out of stocks. It's going to go somewhere. We know it's going into dollars. We know it's going into bonds. Let's bring up the 10-year yield. Let's go back to a 15-minute view. Here's the 10-year. 10 years spiking up 1.23%. So long yields moving up higher. I mean, it was only a week and a half, 2 weeks ago. We had a three handle on the 10-year yield, and we hadn't seen that in a long, long time. Now we have just skyrocketed right back above 4, and it looks like we're going up higher. So where's money going? Money is going into bonds, cash, and oil, commodities. The CRB commodity index last week went through the roof. We are taking Strait of Hormuz situation seriously enough. Most people don't seem very concerned. I think that we're taking it serious enough that we're not putting a lot of our ships in harm's way. The seizure of they would need to take control of that strait, the land barriers around that strait, that's boots on the ground, and you could bet that that's going to be heavily fortified. So I'm not a military genius here whatsoever, hardly a genius. But we had to know that this is going to be an unknown going into this. Jody, welcome. Thanks, Tim. Paul, a massive fire continued burning early Sunday in Tehran after Israel strike target. Yeah, they're taking out the facilities now. What I can see them doing is taking out that Karg Island. That's their main hub for exports. There we may see boots on the ground. Yeah, Scott, it's a beaten up area. If you're looking for blood in the streets right now, I think that if you do believe in crypto and that it's a real thing, like XRP is a real thing. So if not now, when? I mean, I would take advantage of this sell-off. And when you take a look, I don't know the symbol for Ethereum. I'm just going to go back to XRP for a moment. You know, with all the negative news out there, and you go back to that weekly chart, this is not bad price action. We closed up last week, fractionally, but we closed up nonetheless in a bad tape for equities and news. What didn't we go over yet? I guess a little bit of, let's check in with agriculture. Let's go to LE. Looks like live cattle is coming under pressure here. Possible double top on live cattle. Corn. We anticipated an up week last week, and we got it. Corn is at resistance, but it appears as though it's going to break out. I'm sure there's a lot of seasonality here. That's, in fact, wow, wheat. Beautiful week last week on wheat. Looking very nice. And lastly, soybeans. Good week. So money's moving into agriculture. Not necessarily cattle. It was last week it did, but it looks as though that we may have a double top on cattle after a massive historic bull run there. Pardon the pun. Pun kind of intended. Let's check back in with equities. First, let's go back to oil. See if there's any respite there. Wow, no. Pulling back now. We hit a 111. Wow. Let's check in with equities. Cannot be pretty right now. NQ, oh, not that bad. I mean, it really hasn't changed all that much. NQ is down 1.6%. Let's throw an alert up here. And the ES. I just want to see if we break down to new lower lows. Okay, good stuff. Volatility is spiking up to a 28 handle. I think we need a 40 handle on volatility before all is said and done. If we do hit a 40 handle or above on VIX and we hit support on trip Qs, we'll probably be exiting our short position, going in cash, and looking for opportunities. Our strategy has not changed all that much. The strategy has been, let's get short. We've been short for a while now, building short positions. And we booked some profits on the mining stocks, on gold, leaned into the short side. I don't want to stay short very long. Why? It's because the Federal Reserve is going to have a big change come May, and that's going to be a new Fed chair. Very, very dovish. at this point, we're going to go to the Fed watch tool in a moment. They are not discounting a rate cut in June. I don't see how they can cut rates with oil and the CRB commodity index above $100 on oil and the CRB commodity index at 52-week highs. So, and if they do try to cut rates, then the bond market's going to flip out. So at least on the long end of the curve. All right. We covered it. We did it. Good timing. Good stuff. Good conversation. Okay. So a lot's changed in the past couple of weeks. I've been talking about the launch of the new website. I sent out the first of many informative emails today that went out to folks that were good enough to sign up for the forum so that they could do stock chart requests. Now, I have a lot of good relationships with these people. And while we're not going to have a free level membership published, it's not going to show on the new website. I'm not going to disenfranchise those folks that are loyal viewers, participants, and I'm going to have a special link sent out to you folks where you could join up for a freemium level of the new website. And I will give you a walkthrough. It still doesn't have all the polish that I want yet, but in the next couple of weeks it will. This is a walkthrough. This is the gold level membership. And this is the new website. I won't bore you with the homepage, but this is the dashboard. This will change a bit. These will be linked up to most recent commentary. This will be a onboarding tutorial. Current trades. Our partnership with TrendSpider is very, very integrated now, and most of these are not up to date. Right? These are just we've developed brand new plugins, new software throughout this whole process, and I can literally license it out to other folks. I don't know if I'm going to do that yet, but if you go into, say, here's our current trades. If you go in under AI, actually, let's go in under Lyondell Basel. And this is the conviction meter. This tells you what we're doing here. One-stop shop. This is the gold level membership view. We are long. It's a swing trade. We are at 30 or 50% of our intended position. The rocket implies that we're still building that position. Were this an anchor, it means that we're good. We're just going to stick with what we have. Were there a wheat symbol, meaning like harvest, that means that we're reducing size, all within a one-shot view. So if you don't sign in for 2 weeks, you went on vacation, you come back, you know exactly what we're doing. And every time I make a change, this gauge will change along with it. So it's very dynamic, very up to date. This is now trademarked. And we're the only ones that have this. There's no other trade alert service. And I don't like to even call myself a trade alert service, but we do have trade alerts. So we're in that business. Nobody else has this. Nobody has the level of transparency that we do. That was the goal. Be intuitive, be transparent. And here you could see that all members, silver, gold, titanium, these are going to be different price points when they launch. You just open up the symbol in TrendSpider. All right, and all my notes will be in here. I don't know why it's not on here. Maybe I didn't have notes on this one, but there'll be a notes section and, my latest update on that trade. So this is the current trades. This is past trades. This is what I mean about transparency. All our entry prices, our watch stocks, ticker cloud, that's got a membership, whether it be freemium or titanium, you're going to have access to this, and you're just going to come in here like you would normally do, but this is going to be a lot more orderly, and you just enter Cisco, NUGT, and it'll be working off of this. And the higher level that you are, the more probability that your symbol, because this is going to get big. This is going to get really, really big. So I'm probably going to have to break up stock chart requests into a couple of different buckets every week, rather than just doing it once, twice a week that we normally do. So this is a quick tour of the new area. A lot of work went into it. Pretty proud of it, and we'll be sending out emails to everybody, letting you know how we're going to migrate from the existing website and from the existing conversation platform, moving over to the new website. Everything's going to be integrated in the website, and we're going to be going back to Slack. So this will be hooked up soon. So that's it. HIMS looks like it got dumped after hours on Friday. HIMS is gonna pop on Monday morning. They made a deal with they reconciled with Novo Nordisk, whatever that company's name is. So they're gonna pop up higher. I booked profits on our long bet there on Thursday. So we if they pressure the market tomorrow morning, I'm gonna be back in on HIMS, even if I have to pay up a few dimes. But if they really gap it up higher, then I'm not going to chase it. I'll just wait for it to settle down. We'll get back in at a better setup. I'm not going to chase it, though. Do you think it's time for no, Gay. No. We'll go over it, but no, definitely not. Okay, let's talk about. Thank you, Talon. Appreciate it. Really looking forward to getting it launched. Okay, news comes out on Tuesday, NFIB. That's small business optimism, CPI. So it's an inflation data week. So that's consumer price index. We're going to get GDP for Q4. We're going to get the PCE. There's coming a lot of inflation data coming out. And it's really not even going to matter with oil above $100 a barrel. If it stays up there, I mean, these reports, if they come in hot, and then you have traders extrapolate out the next month's numbers, given that oil is going to be above $100 a barrel, I mean, the market's going to be a very, very bad week for the market if these PCE reports, CPI reports come in hot, because they will not yet reflect oil above $100 a barrel. So it only gets worse from there. Schiller PE ratio, 39.18, still eerily close to that 40 mark. And I got to say, this market has been incredibly resilient. Incredibly resilient. Buffett indicator, we remain strongly overvalued. 2 standard deviations is way in the rearview mirror. We're at about a 3 standard deviation move from historical trend. This is abnormal. It's crazy. Earnings this week, not a lot of important names. More retail, some healthcare, smaller cap, mid cap names. Adobe is the only one in the tech sector that matters, and that stock has been pummeled. So not a lot going on this week. Oh, Oracle comes out this week, but they've been pummeled as well. So earnings is really peaked out now. All right, FedWatch tool, June. We're going straight to June. Not even a 50% probability of a cut. So, when you take a look at high yield debt, which came under pressure last week, that's a source of liquidity. That's kind of weakening up now. Another source of liquidity is the Federal Reserve pumping up their balance sheet. And they're doing that, but only with short-term debt. To get the stock market really excited and moving up, they got to buy 10-year, 20-year, 30-year paper. They're not doing that yet. But the balance sheet, it's already begun. Quantitative easing has already begun. Have no doubt about it. If the Federal Reserve is loading up their balance sheet, that's quantitative easing. Oil, we already know this story. Just 1 week alone last week. Think about this number. Oil up 36.18% in a single week. Hi, Bob. Everyone, YouTube just sent a notice. YouTube just sent a notice about this live stream or something else? Isn't there a point where oil can go so far before the market corrects? If so, are we close? My own personal view is that the president does not want to get wiped out in the midterms. So me personally, I believe that there's a short-term cap on oil. When am I wrong? If there's any conversation whatsoever about boots on the ground, then I'm wrong. And then you could see $150 to $200 barrel oil. So until they secure the Straits of Hormuz, you have ships that are loaded up with oil sitting in the Persian Gulf. They can't get through. And you have ships in the Indian Ocean waiting to get refueled. They need to go to the Straits of Hormuz into the Persian Gulf, to Saudi Arabia, Qatar, wherever, and they can't get through. So right now, that choke point, that's 1/3 of the world's oil. So we can't discount that. Volatility. We know this. VIX continues to rise, and it's going. Let's go back to VIX at current. VIX at current is 28.8. I think we're going to 40 minimum. And then again, I want to be out of my shorts. Out. I'm going to play this for you folks. I don't know whether or not I clicked the proper audio share. So let me do this. Let me stop this. They just went ahead and changed everything here. I guess stop. All right. So now I'm going to share again. Oh, I didn't do it right. That was me. I can't even blame the software this time. Stop. Share. Boom, boom, boom. Now we're ready to go. All right. We're not going to listen to all this, but I think it's important to have a listen.
It's quite concerning here. What are the main things we need to be paying attention to as it looks like things are unraveling?
All right. So before we get into this, I want to set the stage. It's this sell-off in the equity markets is not just about Iran. It's not just about oil. We have a major, major problem in private equity. And I'm going to tell you how they just duplicated the same problem as what they had in the financial crisis by infecting a portion of now the insurance industry. So have a listen. This is Daniela Cambone.
Quickly.
Well, I think first and foremost, liquidity risk, as you pointed out. Big institutional investors are happy to sit with private equity, at least they were, for a period of time, but you can't do that with retail investors. They're just not going to wait. You saw that with Silicon Valley Bank. 40% of the deposits walked out of the bank in a day, and that's because people were scared. They were worried about having access to their cash. So, the people like Mark Rowan at Apollo and others who have been telling us that private markets are better than public markets are clearly wrong. And now they're kind of getting their comeuppance. But, it's a shame because the whole sector is being pulled down. The sell-off in AI and private equity and private credit is hurting the banks. You saw Blue Owl, which is another one.
Yes.
And what's interesting is all of these companies, Daniela, something we'll break here as kind of a scoop, have access to insurance companies. And guess what they've been doing? They've been putting all this mortgage-related crapola inside the insurance companies. And then guess what? They turn around and borrow from the Federal Home Loan Banks.
Okay, so once again, private equity or the banks have screwed us. Who do you think is going to bail them out? Do you think they're going to go bankrupt? They're not. So expect this Federal Reserve balance sheet to go ripping through the ceiling, probably beyond the May 2022 highs. I mean, this is going to be so big. And the trend has already begun. We've gone from having lower highs and lower lows over the past 4 years to now higher lows, higher highs on the Federal Reserve's balance sheet. And now they're going to have to start buying longer term debt. BlackRock. BlackRock is charging investors $325 million in fees on money it won't let them withdraw. This is the largest bank in the world, BlackRock. Here's Blue Owl, weekly charts of Blue Owl. I was asked a couple of weeks ago, is it time to buy this stock? It looks pretty good. And it did. I said, no, it's probably a bull trap. And sure enough, the floor came out from underneath this stock. Here's KKR, another private equity fund. These are down over 40% over the past couple of months. You take a look at BLK. Is it BLK? I think this is it. It is it. I don't know why it doesn't show the name here. Yeah, this is it. Okay, good. So BlackRock, look at this total devastation last week. Other names out there, Citibank, well off of its highs, XLF. These are all broken charts. The banks are in big trouble here. Here. CG down 30%. TPG down 41%. APO down 42.6%. BX 45.1%. ARES 45.1%. KKR 46.4%. You don't touch these things. If there's one area of the markets that I do not touch on when there's blood in the streets, there's actually two areas. One, biotech. Two, financials. Because once they go, they go. And you don't know they don't know what's on their balance sheet. They have all these derivatives that they don't know what they don't know. So I would not go touching any of these names at all. And even the jobs in this sector, 75% of job openings in finance are now gone. Peter St. Ange he's blaming AI. I don't think it's AI. It's partially AI, yes, but I don't think it's all AI. I think it's just the sector is just getting annihilated. Let's do some chart requests. All right, let's take this. Let's put this over here. Tim, AAL. You got to avoid it. The airlines are death right now. I remember this time last week, maybe it was 2 weeks ago, somebody was asking me about JetBlue. Avoid them. Oil prices, the largest, well, at least the second largest input cost for an airline besides labor is oil. So you want to avoid these names. But if you're going to buy one, find the best one with the best balance sheet and load up on that one at a strong support level. VIX above 40, oil 110, 120 the barrel, and start dollar cost averaging in. Be very, very careful here with these stocks. You got to buy best of breed. If you're buying AAL and they don't have the strongest balance sheet, these companies go bankrupt all the time. So you'll get wiped out. They'll be fine, but you'll get wiped out. So find the best stock in the sector, buy it, and dollar cost average in. Just make sure you're at support. Kane. This is looking very, very good. This is a weekly chart of Kane. We have a double bottom. And did we break out? We broke out. So this is a buy. Monthly chart. We already have volume. We're only 8 calendar days into the month of March, and we already have up volume equal to the moving average. So what does that tell you? Well, when you take a look at last month's up volume and this month's volume, which is already trending up higher than last month, that's institutional accumulation. That's not mom and pop buying 100 shares of Kane. Daily view. I really don't care about the resistance levels here. If you get any retrace on this, $9.43, I'm a buyer of Kane. Very, 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 very bullish on Kane. DBX. Dropbox. Such a competitive space. But the charts don't lie. Great up volume, great price action. We broke out above resistance. We had 3 consecutive weeks, no new lower lows on a closing basis. And I should say 2 consecutive weeks. And we broke out above resistance. I'm a buyer on any retracement. I'm bullish. I don't like the business, but I'm bullish on it. Great price action. Bullish. Up stock in a down market. Good stuff. Sean, Cal-Maine Foods. An oldie but a goodie. We made some good money here on Cal-Maine Foods. Let's go monthly view. So here's the problem with Cal-Maine is that we have gone from putting in higher lows and higher highs to now putting in lower highs and lower lows. So I think that what you have here is let's get rid of all of these. I'm going to keep these because these are pretty good. Let's get rid of this. What I think you have here is a new downtrend channel. That's how I view this. When am I wrong? If we close above $92 a share, then I'm bullish on Cal-Maine Foods. I think it's going up. That would be a weekly breakout. Actually, a monthly breakout. Here's the weekly view. Good price action over the past several months, weeks, I should say, weeks. Good volume last week, a little bit light, but okay. Daily view. I have to defer to a rules-based approach. If this, then that, right? So the time to have bought this was obviously here on this bullish key reversal bar. Now we've rallied up and into a resistance level, and we've paused. So we can't buy it. Our rules say we aren't allowed to buy this here. Only if we overcome overhead supply, meaning those buyers that bought back here got stuck, they want their money back. We got to fight through that. That's going to require volume. Let's go to the weekly chart, see how volume is trending. Volume is grinding up, but it's still below average. So I would not go chasing this with resistance above. I would defer to the macro chart, because what we do have is a double top and a confirmation breakdown. Therefore, the path of least resistance, believe it or not, after the last 3 months being up, is bearish. This is just a counter trend rally until such time as we break out above $92 per share. Then we turn bullish. Simple as that. We have no emotional involvement here. We don't care. It's rules-based. If this, then that. You're welcome, Talon. Sean, you're very welcome. Tim, you are quite welcome. ISN for gay. Look at you with this fancy stock. What is this? Intensa San Paulo. Look at this. Do not buy. Do not touch. At best, what's going to happen here is you're going to look at all these. This is the value of TrendSpider, folks. I've never reviewed this stock in my life, at least that I remember. And these are the automated trend lines. And we have smashed through a bunch of them in the past week. We are leaning into a third standard deviation Bollinger Band. I think that you could get a rally back up to $38.25, maybe $39 the share. Then I think that the sellers move in and they lean in to the short side here. This trend is broken. So I'm not a buyer here as an investment. Might I trade it as a swing trade up to that $39 per share mark? Maybe. The key is we cannot put in a new weekly lower low. New weekly lower low, and it's off my radar. So I'd be very, very careful here to the bull side on this stock. You do have horrible price action. The volume action is not that bad. So it looks like you have a buyer's strike here. So I would avoid this, and quite possibly after we get that counter trend move, then probably short it. And that is it, folks. Tim, how long after oil comes down does it have a net effect on airline? Well, it all depends upon how each of the cruise lines and the airlines are hedged. Many of these companies are hedged. So it all comes down to management. Like anything else, if they properly hedge their book in advance of this event, and frankly, the reason why I bought oil is that I'm an idiot. And I saw that oil was not breaking out, yet we were massing massive amounts of resources into the Middle East. 1/3 of our Navy is in the Middle East or in the Mediterranean. So you don't do that unless you plan on doing something very, very serious. So we bought oil. So if I could do it, and you have a CEO or CFO of an airline or a cruise line that did not go out into the futures market while oil was cheap and hedge their book, they should all be fired effective immediately, terminated. The handwriting was on the wall. Did I answer this question? Isn't there a point? Oh, I did answer that question. So do you think there is a choke point? A choke point in terms of logistics? Yes. It's the Straits of Hormuz. Yes. That's got to be reopened. Now, the upside is that if they bring on Venezuelan oil, Venezuela is has the largest reserves in the world. If they are able to take Venezuelan oil, which does not rely upon the Straits of Hormuz, they bring that back online, then oil comes down fast. They're talking about opening up the Strategic Petroleum Reserve. They looted that. Biden eluded that. And Trump should have built it back up. I think he tried to, and the Congress said no. So there's not much left of the Strategic Petroleum Reserve. We appreciate on camera. You are almost the invisible man. We see head sometimes. I'm sorry. I changed I have floodlights in here and they're not working. So I apologize. We'll get it fixed. Miser, you're welcome. Thank you, Jody. Look forward to it myself. Hey, everybody. I'm going to leave off with Jody's note here. Have a profitable trading week. I will talk to you soon. Have a great remainder of your evening. Thanks for being here. And I'll talk to you soon. Be well.